Hey Renter Retires, it's Adam Schroeder here, and today we're going to go over the housing stats for the week of March 14th. Alright, before I get started, I want to remind everybody, please subscribe to our YouTube channel, click the notifications bell. Don't miss any of this information we're putting out. We're really trying to help you understand real estate and make you the best possible investor you can be as you get started on your journey or as you continue your journey. So don't forget to subscribe, and if it's helpful, click the like button. Let us know. And if you have any questions or comments or any videos you want us to make in the future, leave it in the comments below. We will get to it as soon as possible. I said today I want to talk about some housing stats, and I know we have Sam who does our real estate market update on most Mondays, but I want to talk about the broader scheme of things, the bigger picture. Because when you're viewing the real estate market, it's important to keep things in perspective. You need to know how things have been and how they are now so that you know, in general, where we might be as we move down the road. That's why I wanted to start doing this update. So every week, I'm going to bring you some housing data that has been released that is important for investors to know. This will allow you to stay up to date with the market so we can see whenever a tide change does actually occur. So let's get into it. Housing starts fell 4% month over month to a seasonally adjusted rate of 1.638 million, which sounds like a lot, but it failed to meet the expected 1.7 million and is the lowest since late 2021. So as I mentioned several times before, we've been low on the housing numbers before, and now we're falling short of the expectations that we had to begin with. So, housing starts for single family units dropped over 5% to 1.116 million. And the Midwest and the South saw the biggest declines in starts, with the Midwest seeing a 37% drop and the South seeing a 2% drop. Now the Northeast saw a 2% bump in construction, and the West ran wild with a nearly 18% increase in housing starts. So, the total housing inventory, however, continued its steady decline. According to the National Association of Realtors, since inventory's recent peak in July 2021, with 1.31 million homes available, we've dropped all the way down, a nearly 35% drop to 860,000 available homes in the United States right now. That is, to put it simply, not enough. Rental vacancy rates dropped across the country in the last year. The Midwest saw a 16% decrease in vacancy rates, and the South saw a 15% drop. Suburbs, where we like to invest, have the lowest vacancy rate of any place, 33% lower than the outskirts of MSAs, and 11% lower than the inner cities. So, like we always have in our inventory, the suburbs are where you want to be. You get the best rents, the lowest vacancy, things are good there. Now, the home ownership rate in general in the US remained flat year over year, right around 65.5% nationwide. So in the latest Case-Shiller index, which I will grant you only looks at 20 housing markets in the country, with an index of 100 representing where we were back in January of 2000, that has now hit its highest ever peak. We're closing in on 300, so congratulations, I guess, on that one. And if you want to look at the housing price index, which has all of the US, and you can get some data going back a little bit farther, where they put the basis of 100 being 1980. Well, we're now over 550. The most recent one was 557. So this compares actually the repeat sales to see how a house changes over time. So that's 557, starting to get up there. And just so you know, the Fannie Mae Freddie Mac conforming loan limit in most markets, in normal markets, aka not California or New York, is $647,200. And the spread between the 10-year Treasury and the 30-year fixed rate mortgage barely budged from February to March, remaining right around 1.9% higher on the 30-year than on the 10-year mortgage rate. But it is a substantial increase from most of 2021 and early 2022 that saw the spread right around 1.5% higher for the 30-year than on the 10-year Treasury. So, 30-year mortgages also, just so you know, on average are coming with a 0.8 points paid on the loan to get the rate that they're getting nowadays. So people are paying points. It hasn't hit an average of 1 yet, but people are paying points. And the St. Louis Federal Reserve also released their 5-year inflation expectation in March, and it now expects a 2.36% inflation rate. And while that may not sound high because you've heard what's been happening so far this year, it is, when you compare it to what was happening prior to 2021, whenever it was very rare to see any expectations that exceeded 2.2%. So as we hear the Fed talking about wanting to keep rates, inflation rates around 2%, well, they're starting to think it's inching up there, and so they might continue to do things about it however they think is best, which obviously, as we all know, tends to be rate hikes is what they do because it's the main tool that they have, right? And finally, we'll end with mortgage debt service payments. As a percent of disposable income, this can tell us if people are starting to get into trouble paying back their mortgage debt. You saw it peak in 2007 whenever we got all the way up to 7.18% of their disposable income. Nowadays, we are nowhere near that problem. Right now, we are at 3.8%. So we have a lot of runway before we get up to the point where we have, concerns about disposable income and mortgage payments. So that's what I've got for this week. Really hope it's been helpful for you. Just know, you look around, we still have tight inventory. Rates are still historically low. Not as historic as they were 6 to 8 months ago, but still ridiculously low. Right around 5% or so for an investment loan is a great deal to get. I hope it's been helpful. If it has, please click the like button, leave a comment below. If there's anything you want me to cover, leave that in the comments below as well, and I'll get to it as soon as possible. And don't forget to check us out at renttoretirement.com. That's renttoretirement.com. You can see all of our inventory. You can schedule a call to talk with our investment strategist. Happy to help you out however you need. Appreciate the time you're spending watching these videos and making yourself educated. Don't forget to subscribe, and I'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.